it looks like Pinterest just opened.
Oh, it
did, yes.
So Pinterest, it looks like getting about a 25% boost.
Yep.
Here, so
There you go.
So they're, as you said, not going undercorn.
No undercorning.
Save from the undercorning. It looks like here.
Can we get
20 through 75.
So one of the risks, though, is when we were talking about Pinterest, one of the risks that they identify is the fact that even with all of the algorithms they have, Google, Microsoft, Bing and Google could change how you find.
Google did this once. There's a big risk factor about this, that when Google tweaks the algorithm, the number of users for Pinterest just falls, right? They made it harder to find. So Pinterest is obviously optimized to be one of the top results depending on what you're searching for in Google. So they're highly dependent on Google. If Google was an aggressive company, if they were directly competitive with each other, Google could, I think, make the people at Pinterest really suffer if they wanted to.
Remember though, Rhett, that happens when you're searching for, let's say, collectible beer cans. Right?
So I was just this morning.
I know you are, because that's your breakfast of champions over here, my man. But so what I'm saying is there's sort of two ways to get to this platform. One is through organic search like that, and SEO is so important, and they are at the mercy of Google. The
and
other way,
when Google tweaks the algo, you see it in the numbers. It's like, that was a thing.
But my point here is that this is also one of the few campfires that people still actually go to in the internet. Like people wake up and say, I'm going to Pinterest. There's not a whole lot of sites that have that kind of power. And
most
that's
of them are
saying
social media
most
sites,
of them you
whereas
come in through the
Pinterest
side.
is characterizing itself not as a social media company. Although I have to say, does anybody here use Pinterest?
Well, we're not. Most of us are not the demo. You're the demo.
I'm the demo.
Two-thirds of the users in the United States are women.
Yeah.
Right. Yeah. I mean, for sure. But there are beer can collectors too.
All right. So not collecting beer can, but collecting stocks to the upside is Inez Ferre. She is joining us now for the latest, and we now have both of these IPOs underway. Inez.
Yeah, that's right. It's interesting, Julie, that you were asking earlier, does anyone use Pinterest? When I walked in here this morning, some of the traders were talking about Pinterest, and many of them, the ones that I spoke with, don't use it, but they were very much excited about this IPO. It's another tech IPO here listed at the stock exchange. It opened at $23.75. Shares opened at that price, and I have to tell you, the cheers that you heard here, all the traders were gathered around the Goldman Sachs desk just waiting for that opening trade. A lot of excitement, and they also, of course, have been watching what happened with Zoom and how Zoom popped at its open over at the NASDAQ. So a lot of excitement about IPOs. Speaking to one trader telling me that it's a big deal for them. It's a big year. Now, Pinterest is not profitable. It's a very different company than Zoom, as you guys have been mentioning. So there are differences, but a lot of excitement nevertheless. Guys, back to you.
Inez, thank you. We're going to keep talking about Pinterest, which is now trading. And when we were going to Inez, we brought up the fact that 2/3 of their users in the United States are women. But the other, to your point, does anyone, you said, who wakes up and goes to Pinterest? You get a constant, once you've signed up to Pinterest and they start identifying things you're interested in, if it happens to be cars, you get a notice. I get something almost every. You get something almost every day. I get an email, which I do delete because I just don't have the time to keep going in it. But they're very good, I think, at hitting the people who've already been there.
And they have an incredible brand. I was shocked. I think that they have something like the third most recognizable trademark in the United States. It's shocking, right? After Amazon and I forget, maybe Coke or something. But I mean, out of nowhere. Right? I mean, talk about creating brand equity in a short period of time. That red P, or maybe it's white on red, but it's red and white and it's a P. I know that.
Yes.
But I know what it is. And when I see that, I know what it means. And that ain't nothing. I mean, that's some powerful stuff.
So now that we have Pinterest and Zoom, can we, go ahead, Jared.
I was just going to remark, one of the things we haven't touched on is the dual class shareholder structure that Pinterest has. And I read their draft registration statement. They didn't have that in their draft registration statement. There's only Class A shares.
I remember you discovered that.
Yeah, and now we learn that 2/3 of the voting control is held by the existing shareholders prior to the IPO and the management, the directors. And it's a similar story for Zoom Video in that the voting power that is concentrated in the hands of management and the existing shareholders, which are the VCs, the big names that we know and love. And it just seems to be this is now the norm, whereas a few years ago it was controversial with Snap. Snap was excluded from an index.
And it sort of surprised you with Ben Silberman too, because he is this kind of mellow, I'm going to do things the right way. I remember I met him the first time and I said, explain this to me. And he goes, Imagine if you had a collection of forks. And I was like, what are you talking about? I totally didn't get it. I mean, he had trouble raising money initially.
It's like
right?
the NPR of the internet.
Right, yeah, exactly.
Is it necessarily a negative or a positive? Because there are some people from the startups who you still want there,
Sure.
and you don't want pressure from activist
Yeah.
investors to try and push them out.
Well, so we have a thing that we call founder power that we rate on companies when they're going public.
Interesting.
And of the 14 categories that we rank or that we score, founder power is the most highly correlated to aftermarket performance. So what it means is if the guys that are running the company can actually run the company, they tend to do well. But one of the things that's really important is that the founders have a lot of ownership. So for example, Snap sold non-voting shares and the founders had a ton of ownership, right? But they were just wrong, right? So you had a bad outcome there. But in general, founders who have a lot to lose, like for example, Zuckerberg, can fight his way through. I think they were underwater on their IPO for a year, but he's very long the situation and he's not selling anything. He has a lot of power to do whatever he wants to do. And so for long-term investors, founder power tends to be really important.
Anything you want to share with us about founder power and Pinterest?
Yeah.
Is there...
Well, so one thing that we thought was interesting is that the super vote is shared with the early investors, which is not always the case. Usually when Andreessen Horowitz and all these guys are taking a company public, they give up their preferred and their extra votes and things like that. In this case, they didn't. So I think the collective early investors and management team have like 99% of the vote now or something like that. And that is different from some of the things we've seen before.
That's so interesting too, Rhett, from a standpoint of what the venture business is becoming, because of course, it's an orthodoxy, right?
Yes.
It's an exit. We're out, we're not in that business. We don't do public stakes at all, but everyone's expanding their models, in every business nowadays. And so Andreessen Horowitz, we're an everything company, right? And so I don't know how long they're going to hold on. I mean, these guys are not supposed to hold public equities, but I guess they do.
They're going to hold on until the lockup, that's for sure.
Right. Well, they
so,
got it.
they're not going anywhere for 180 days, and then
Right.
after that, we'll see. I mean, what we see these guys do is sometimes they will sell down their positions, sometimes they'll distribute their positions to their LPs for tax efficiency reasons.
I guess it is kind of an endorsement. If
Yes.
the venture people are hanging on when the stock goes public, right? I mean, that if I was a public shareholder, I'd be like, wow, they're actually along for the ride a little bit, even if it's only 180
If their average
days.
entry price is $4.50 and it's still trading at $55, $56, as in the case of Lyft, yeah, that's a good value proposition for the VCs.
Yeah, but they could, if they had sold out at the IPO in terms of Lyft, right?
I understand.
So if we're going
Right.
to talk about Lyft on this subject, though, there's a thing that didn't get discussed enough, I think, which is Carl Icahn had made an investment in Lyft a couple years before the company went public and had a director on the board and sold his entire position to George Soros at $61 is what we're hearing before the IPO, right?
So that's an indication.
Look, management at Lyft had two triggers for their equity, right? Their performance was defined as either an M&A event or an IPO event. So that suggests that they went looking for M&A events and couldn't find one, right? And M&A buyers usually get a lot more information provided to them than IPO buyers do. But we know that if you're on the board and you've been invested in the company and you're a Carl Icahn, you had basically perfect information about what was happening in the company. And he's a seller at 61. And so when you're looking for that's a strong
Right.
statement, it's
Yeah.
like there you have a very strong
Yeah,
statement.
I mean, and that there was a lot of blowback about that. And that didn't help that IPO either. I
Right.
mean, people were sniping about that, as I think they should have.
Well, we should bring up the fact that Lyft is now being sued by
Yes.
a number
Yeah.
of its shareholders
Yeah.
who say that the company lacked adequate disclosure prior to the IPO.
Well, that's hard to argue against. I mean, the disclosure was appalling in that thing.
But
Tell us
sort
what
of
you really
illegal, sort of criminally appalling in terms of, do they have
Actionable.
Right.
I read your letter at the time saying that they were lacking key metrics in terms of driver churn, passenger
They didn't even
churn.
tell us how many drivers they had.
Yeah, and they
over
weren't
time.
breaking up bikes, scooters, all that.
Right.
So you couldn't model the business based on that. Do you think that was an intentional omission, perhaps because they had been in these failed M&A discussions?
Well, I mean, what we said about it at the time is that the buyers who would have had almost perfect information weren't there at this price. So it doesn't suggest that they were purposely sandbagging the public investors, but it possibly creates a motive for them to do that.
So there was value at 62 maybe, but not necessarily above 72.
Right.
I got
Again, they got greedy. They didn't tell people the story that they needed to feel good about owning the stock at 60 or even 50 for that matter.
Do you have a quick comment? 'Cause
And
we
it
wanna
so
get-
doesn't, I'm going to say it again, it so doesn't match,
Right.
their talk. It so doesn't match. You'd expect this from Uber.
Right.